Hello and welcome to NDTV Profit. You're watching IPO Adda, and the big IPO for this year is Ather Energy. It's one of the largest IPO coming after a few months because of the kind of market volatility which we saw. The IPO, which opens on April 28th and closes on April 30th, is priced between 304 to 321. It's a fresh issue of 2,626 crores and an OFS of 354.8 crores. So total size is little less than 3,000 odd crores, which is coming in. And at the upper end of the price band, the company is valued at around 12,000 crores. And joining me today is Tarun Mehta, who is the ED and CEO of the company, and Sohail Parekh, who is the CFO of the company. Gentlemen, thank you very much for joining us on NDTV Profit. Tarun, let me start with you. It was a much anticipated IPO, but you had market volatility coming and this, giving a pause. And then you have cut down on your size of the IPO as well. And also, if you can take us through the valuations.
Right. So, we began the book building process a few months back. While there was obviously volatility for a while, bankers advised us well on both timing and the price. The size we've largely kept intact. Recent quarters performance gives us a lot of confidence. If you see our Q2 and Q3 performance, so we decided to reduce our debt repayment because we have more conviction on our accruals than ever in the past. But otherwise, all our growth investments have been kept intact, and that's how we are going in the markets. Volatility aside, I just want to make a comment. What we saw on the road when we went and met investors and told our story is that the conviction on India consumption, conviction around India electric, and especially two-wheeler electric, was very, very strong. And that's what gave us the final conviction to launch the process.
Mm-hmm. The last round which happened in which you had given it to the India-Japan fund, the adjusted price was around 267. You are coming at 321 rupees at the upper end today. Give us a sense of the valuation and why you've decided to take a premium over the last round, given that things we are in a very uncertain time here with respect to global markets and foreign flows. And while there is a conviction with respect to electric vehicles and two-wheelers in particular, the two-wheeler category is also facing a lot of headwinds in terms of backlashes with one of your competitors.
See, the overall two-wheeler story, I think two-wheelers had a great FY25. Dispatches and retail grew at a very healthy pace. Scooters particularly continue to be very strong, which is where Ather is largely focused today. The electric scooter market, however, obviously grew much faster than the petrol scooter market. So this remains one of the strongest growth stories in our industry today. So I think all those pieces add up really well. Particularly for us, in the first 3 quarters of FY25, the data of which is there in our prospectus, you will see an incredibly strong growth, and that's what's giving us a lot of optimism and excitement. On the back of a new product launch, Atherista, which is this new family convenience scooter that we launched, we've seen a significant uptick in volumes, market share, and that's what's also driving a lot of store expansion for ourselves. So the last few quarters have been very satisfying from a business growth perspective, and what's ahead for us is a lot of expansion again on the back of a new product. So this is where our conviction comes from. On the price, once again, I'll say the same thing. Nobody can time or nobody can predict the market. This is down to the advice, the solid advice that our bankers have had as part of the book building process.
Sohail, you're raising 2,600 odd crores. Can you give us an idea of where it's going to be deployed?
So we are very focused on the growth that Tarun talked about, with the expansion in distribution, with the solid response that the company has received on Vista, our new convenience scooter. We are seeing very strong demand. On back of that, we are working on new platforms. We are working on strengthening our R&D. We are working on further brand building. So as you would have seen, the bulk of the investment is going for our new plant in Chhatrapati Sambhajinagar. And we continue to invest in R&D. That is our strongest point, and we continue to bet on that with a host of development happening across product, across platforms that we have already laid out in the story. And we want all of us, we urge all of you to look at the story, look at the document, and see how strong conviction is in our strength and strategies that we have laid out.
I know it's coming through in the kind of investments that you're planning as part of and the proceeds which are going to be used, because you are the fourth largest player after Ola, TVS, and Bajaj. And the kind of conviction that you're putting in investing in new capacities and building new capacities, gives confidence which you have that you're going to grow at a much faster rate. So give us a sense of the kind of the growth rate that you've been growing at, and going forward, how do you plan to ensure that the market share which you have between 10 to 11% at this point in time, it can be scaled up further?
Right. So you will see that with Rista launching last year, this year FY25, last FY25, our volumes have shown already in the first 3 quarters a very healthy amount of growth. There's an almost 40% growth in volumes in the first 3 quarters. And remember, Rista launched just in the second quarter. So there's been a very significant jump, which has also led to an overall better market share. So if you see a recent month's performance, and this data is public on the Vahan portal, you will see the business consistently hitting 13, 14, 15% market shares. We continue to solidify areas where we are strong, for example, like the south of India, where we've been one of the, if not generally the largest player by volumes in all the 4-5 states put together. And with Rista expanding in a big way in the non-south markets, particularly West and North India, where recent successes and volume and market share growth in states like Maharashtra, Gujarat have been very heartening. So this is where growth is coming from. The biggest lever for us is expanding our distribution. And we mentioned, we've walked people through this in our document, in our prospectus, that Ather's achieved this kind of market share and this kind of volume despite a fairly limited distribution in the past. Our distribution was limited because we had a single product which was more focused in the southern markets. But now with Rista, a very large part of the country opens up to our products. We believe that the Ather brand is going to be equally successful there, and which is where we are very bullish about adding new stores and expanding rapidly.
Mm-hmm. You spoke about distribution, 280 odd experience centers that you have in India. Where do you want to take these experience centers? Because your competitor is talking about 4,000 touch points. How do you plan to do it? And I remember our interaction earlier when you said that distribution plays a key role in expansion and market share. And you've been able to do that in Maharashtra and Gujarat with the recent launches. So how do you plan to expand your touch points across India?
So on distribution, we have pursued a capex light strategy. We do not, for the most part, we don't run stores ourselves. This also keeps our operations simple and also has more partners working with us. So it's a dealer-led model where dealers put in the capex and dealers invest in the opex. This also makes for a relatively easier expansion with their support. Where we are largely expanding, I would say once again directionally, it's the non-south markets for us. You would notice that our throughput per store, if you were to calculate, has been substantially higher. Distribution generally is linked to how many products you have. The wider your product portfolio, easier it is to have more stores that can be profitable independently. And generally as a company, we've been very focused on profitability. This has been something we've kept right up in our radar. Adding stores, one of the most important question we ask is this store going to have profitability in the near term? And only if the answer is yes, do we progress ahead. With Rista, a lot of those stores are now saying yes, which is why with dealers, we are adding a lot of distribution, especially in the recent months.
Soil, can you come in here and give us an idea of the kind of break-even point?
Just one more point I want to add here.
Yeah.
Yeah, sorry, just one more point I wanted to add here. India is a very large market, and I think our ICE peers have really given us a glimpse of the kind of potential that we can have with distribution here. Also, India is a very large market with very strong dealers and distributors. And I think many of them have shown an enormously strong interest. Some of the strongest dealers in the country are today Ather partners. So it's on the back of partnerships like that that we're very bullish about expanding pan-India super fast.
So,
And just to add, at Ather, we are very, very, yeah.
Go ahead.
Yeah, so at Ather, the right unit economics and getting the operations right has been our foremost priority. And if you would have seen, when we started, we didn't started the selling of the product very aggressively till we got it right in 2022. And that strategy continues. Our top focus is getting an unit economics right and improving it day by day on the back of 46%, which is more than almost half of the workforce which we have deployed for just doing R&D and only focus on scooters, right? So this, I mean, you would have seen, right, in the numbers that we have filed, we have gone from 9% to 19% in adjusted gross margin. And this is on the back of solid, like if we have to take our flagship product, 450X, right? In last few years, we have done 31% improvement in the BOM. And the warranty costs are dropping year on year. So the product, the quality is really shining through with Rista, which is a low-cost platform. In fact, our BOM are in fact lower than the 450X, which is our performance scooter. This has given significant improvement in the margins, along with obviously the cell cost reduction, which everybody in the industry have the benefit of. So with this, I think we have a very, very good margin structure even today, and very, very less reliance on the subsidy. And we would say that today we are very confident internally with what we have achieved so far, that the margin story is looking very solid.
Sohail, Tarun spoke about the fact that they look at, you guys look at store expansion or distribution from a point of view of how quickly a store can become profitable. Can you give us an idea of normally what is the break-even time for a store to become profitable, or what is the break-even period for any store or any new store?
Sure. So I think you would have to do your own research, because we cannot share that data because it's not a public data. But if you had to do our own research, or anybody has to do that research, you would see that the throughput per store is significantly higher. Even what Tarun talked about, our expansion in South and the leadership that we that we have there. You can compare us with the competition, with the overall industry. What is our stores count, whole of South put together, and you will get a very natural answer on that.
One of the big questions which many investors would also be asking you is about the cash flows from operations. When do we see cash flows from operations turning positive, and what is the path to profitability?
You want to take that, Tarun?
Yeah, sure. See, so profitability is always two parts of the equation. How is your unit economics trending and how are your volumes growing? Our focus that Sohail highlighted on cost reduction, material cost reduction, and hence margin expansion has been incredibly strong, which is how our margins have almost doubled from 9 to 19% YTD and in FY25. And volumes have also grown. You will see again a Q3 data that volumes have grown almost 40% in just 3 quarters over previous 3 quarters in FY24. So both parts of the equation looking very strong. Our EBITDA losses have also substantially come down in FY25. So we're feeling very bullish about how we are moving towards profitability. And generally, Ather has been very focused on capital efficiency and capital overall. In fact, we talked a lot about this in our prospectus. We like taking, we always made decisions that preserve our flexibility, preserve our agility. We do not lock a lot of capital in singular decisions. And I think that's worked very well for the business, which is why we've been generally relatively more capex light than many other approaches in our industry. And I think that's worked out very well for Ather. Investing in tech, investing in product has paid out the best dividends so far for us, with solid premium positioning, which gives us a selling price premium and a lower cost structure because of the investment in R&D, which overall expands our margins quite healthily. So we feel overall this takes us in the right direction, hopefully very quickly towards profitability.
And what I would like to add to what Tarun said is, you see our Pro Pack right, which is a one-time accessory sale that we do. We
The
have
software pack that we have.
Software pack
Ather
that we
stack.
have. So that's an 86% attach rate. So everybody coming to the store, if 100 customers come, 86% of the customer opt to buy an Pro Pack. That has contributed 6% to our revenue and almost 53% in terms of an EBITDA. So I think that's a very unique thing, which is only Ather, where we are able to monetize this entire value proposition that we have. And this is what, I mean, this is actually shows that we are actually able to monetize what we are investing in R&D as well.
Tarun, you're going to spend 750 crores on R&D, and your R&D spends range between 10 to 15% of your sales. Do you think that this is the kind of R&D expense which will be there over the next few years?
You know, so just moving for a second away from prospectus and just my own personal feel, I feel as a country we need to invest a lot in R&D. Look at BYD across the border. I think if there's one thing we learn out of that approach, the time is there to not look at single-digit investments. The time is there to look at much larger investments. And personally, I really relate to that process. I believe investments in product, investments in tech, investments in R&D in a new tech industry like electric are going to pay dividends for the next 20, 30 years, particularly in electric two-wheelers where India possibly has a shot at becoming one of the most prominent players globally. So this could genuinely be a global play. Our peers in the industry keep talking about it, how India could be one of the best exporters, and I very strongly believe in that. So, and if you've got to win a global game here, if you've got to win a global game with a new technology business, you've got to invest in R&D. You should not shy away from it. Where we are putting our money, it's in projects like the EL platform, the new platform for scooters that we're developing. It's in things like the Zenith platform, a new platform for motorcycles that we're developing. And again, Ather is thinking not in terms of products, but full-on platforms there so that we can birth many more products on that platform in the future. We are investing in charging infrastructure. We are investing in new battery packs like LFP battery packs. And we obviously are investing in Ather Stack, our software on the vehicle, which is an important part of how the new experiences on the product come through. So we believe this remains an important cornerstone for how we differentiate ourselves and honestly how our entire industry is going to leapfrog global competition.
Tarun and Soil, it's been a pleasure talking to you today. Your IPO is opening on April 28th with the anchor book coming on Friday, April 25th. Price between 304 to 321. The company is raising nearly 3,000 crores, valuing the company at 12,000 odd crores at the upper end of the price band. Thank you for watching, and Tarun and Soil, thank you for joining us on NDTV Profit.